Hey, up-and-coming professional stock traders. Dr. Barry Burns here with Top Dog Trading, and I'm here to help you with part 3 of the Stock Market Trading for Beginners series that we're doing. All right, so we've been just looking at price action and helping you to read high, low, close bars. Basically, open, high, low, close is what they're usually called. And so a quick little review here, and then we're going to move into our lesson. So let's just look at the hard red edge of the screen as it is. And as we look at this last bar, if you'll remember, this is a what we would consider a bullish bar. And the reason for it is, well, a couple of things. Primarily, just in and of itself, it opens here and then it closes here. So, and it's also wide range. Remember, that's a very important aspect of reading these bars as well, is the range of the bar from the low to the high. Narrow range bars such as this really don't have any particular direction regardless of whether the open or close is at the high or the low of the bar. Just the narrow range makes it a neutral bar. So we're looking for directional bars to be wide range bars. In other words, wider from low to high than the average of most bars. So this would be considered a bullish bar. All right, now the other thing though, let's add a little bit to what you've already learned. And let's take this and look at it from a different perspective. So the exact same chart, same bars, except we're going to change the style of the bar. Now, how this looks in your charting platform may be a little different. This is NinjaTrader that I'm using. We're going to use candlestick bars, and you can change the colors in here and things like that if you'd like. We're going to change the bar width to 10 just so that it's more visible. The wick, we're going to change that to 3. All right, and you'll notice color for down bars is red, color for up bars is green. All right, that should do it. So you can change the color outline, so forth. We won't get into all that. Those are just design elements. And now look how it changes. Look how it looks different. That's the same chart, same bars, but now we've just changed the style of how the bars look. So now, as you can see, that same bar that we were looking at before looks like this. One of the things that people kind of like is that it's color-coded for easy recognition. So in this case, let's define how these bars are designed. So let's just take this bar here. So there's your low, and of course up here is your high. Pretty easy. Now, if it's a red bar, and you can color code these however you want, but I colored it red for down bars. What that means is that'll help you know where the open was and where the close was, because as you'll see, it goes across to the left and to the right of the middle of the vertical bar. So unlike the Western bars, where the open was on the left side and the close was on the right side, here it goes across both the left and to the right. So if it's red, that means it opened up here and it closed below the open. That's what makes it red. That's what turns it a color. All right. Now, conversely, of course, and when we get a green bar, that means it opened lower than it closed. It closed above the open, and therefore the net result of that is a green bar. So in this case, we have our open here and our close up there, and therefore that's what makes it a green bar. Closes above the open. Now we still have our 4 elements: our open, our high, our low, and our close, but it's just designed differently. Some people like this. I personally like it. I started learning with just those open, high, low, close bars that I showed you before, and I eventually, after quite a few years actually, switched over to candlesticks, and now I love them. I just think they're easier to read. Just at a glance, you can really see what you're looking at. And the one thing I'll warn you about, though, is that sometimes people get too enamored with whether it's a green bar or a red bar, and that really doesn't mean anything in some situations. So, for example, the fact that these 2 bars are green does not mean that they're bullish bars. And of course, the market continues to go down from here. Again, you've got to consider the range and how far the open is from the close. So that's very, very important. Let's do one quick thing here, and let's just pull up two charts similar to each other with the open, high, low, close, and also the candlesticks, so you can see them side by side. Okay, so now we see the open, high, low, close bars. Sometimes they're called Western bars here on the left. And you see the candlesticks on the right. So this bar here, that one is the same as this bar. So which of those is easier for you to read? By the way, there's no right or wrong here. Candlesticks are not necessarily superior to the Western bars. It's a matter of personal preference. But then you've got this one here, and that would be equivalent to that bar. It is equivalent to that bar. I notice that it opens here, closes here, so that makes this a red bar. Notice a little bit of, by the way, another important thing, well, I'll point it out here in just a second. This bar here, same as that bar, closed here, open here, closed above the open, and that makes this bar green. Okay, then this red one here is that, again, closed below the open. And again, notice this part above the open, that refers to this black vertical line here. Now this one, let's correspond that with this one here. The open is near the high, the close is near the low, and so therefore there's very little black vertical line above the colored portion. Okay, so now let's talk about what those are here real quick. So when it comes to defining these elements of a candlestick bar, and I'm going to just really blow this up, okay, to make it real easy to read. Okay, so there we go. We'll just look at this bar here and define them for you, and then we'll finish up our video. So this part here is called the real body. This colored aspect of it is called the real body of the candle. And then the black lines above and below it, when they do occur, are called the wicks, or many people call them the shadow. All right, some people say they're more properly defined as the shadow. Some people call them wicks because, well, that makes sense with a candlestick that has wicks. So they reference the high and the low when they're not equal to the open and the close. All right, one last thing I'll show you here before we go, a little preview of the next video to come, and very, very important. All right, so as we said, this final bar here that we are showing on the chart is a bullish bar. Now, does that mean, big question here, very important question, does that mean that from here the market is going to go up? And the answer is not necessarily, because while it's important to learn how to read price action, in and of itself can be very deceiving. It's not enough. It's not enough to make money with. So let me show you what I mean. Yes, that is a bullish bar. Let's see what happens with the market after that. Well, the next bar is a fairly neutral bar. Narrow range, look at the open and the close are almost essentially the exact same. But after that, very neutral bar. High and low, very close together, so it's a narrow range bar, and the open and the close very close together. So really not much happened that day. This is a daily chart that represents the day. Same thing with this one, very neutral bar. Now the market actually goes down a little bit. Still a green bar, but does that mean that's a bullish bar just because it's green? No, remember, that's the one thing you want to be careful of as a beginner. Don't think that green means up and red means down for the future. It's just telling you the relation between the open and the close. Then the next bar goes up, and notice it's red, but it went up. Okay, and then the next one's down a little bit, next one sideways. All right, and you get the idea. We'll narrow it down here. So really, after this bullish bar, the market just went sideways for weeks. What it did indicate, though, was that this downward move was done. Let's get our scaling back here. Right, so it did indicate that, oh, boom, a lot of buying came in, and doesn't necessarily mean that the market's going to go up, but what it did mean, there's a lot of resistance for the market to go down any further. So markets don't always reverse when bullish sentiment comes in or bearish sentiment. Sometimes they just stop going up or down, and they just go sideways for a while. How do we determine that? All right, that is for next lesson. So hang in there for the next video. Watch for part 4. And I hope you're enjoying the series. Feel free to click on the little box above and get my free 5 lessons if you'd like to get those. A few free 5 videos that talk about how amateurs trade differently than the professionals. Love to share that with you. Also, add any comments down to the bottom. Love to hear your comments or any questions you might have. Happy to answer your questions. and anything you want to hear about in the future, click the like button, because why? It just feels good. It'll make you feel good, believe me. But seriously, I like to know when people like the videos. It encourages me to give you more. So if you want more, go ahead, click like, leave a comment, and let me know anything else that you'd like me to cover in future videos.